It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, November 2nd, 2015. Brand new week, brand new month, and filled with trading opportunities here today. Hope you guys had a great weekend. We got daylight savings time comes to an end. I know. Remember, you got to have the darkness to appreciate the light, right? We got to have this time of the year if you want that springtime to be so amazing and the summertime to be so nice and warm for us, right? So daylight savings time comes to an end. It's looking like holiday time here now. I haven't heard the Christmas music yet, but then again, I haven't really been listening out for it here. World Series came to an end this weekend. Halloween came to an end this weekend. Hope you guys had a great weekend. Boy, I mean, it's difficult to not find amazing reasons why it feels great to be alive right now. It feels great to be a trader. Great volume, great volatility. Boy, oh boy, I could go on all evening about how excited I am for this week and the month of November, but you know me. We get a jam-packed newsletter in store for you guys and gals. Crude oil tonight is sideways and balanced this evening. Our plan is to buy the lows and sell the highs of the range using failure patterns tomorrow on the black gold. How about the E-mini S&P? Bullish with a spike in channel this evening, possibly a major bull channel. We'll see. We're definitely bullish, though, on that S&P this evening, the spike in channel. Our plan, based on that spike in channel, is to stay patient for a deep correction off today's highs, and we're going to be looking for seller failures to buy more tomorrow. Got to stay patient on the S&P. I got a reason why. We'll go over that in a second. Gold, the yellow metal, the GC contract has been trending lower ever since Janet Yellen's FOMC announcement last week. And our plan really hasn't changed at all. We're looking for selling opportunities on gold. Every time we see short-term corrections off the lows, we're using buyer failures to keep selling. It looks like they're getting a little bit tired, but, we thought that last week too. So got a plan for the yellow metal for you guys tomorrow. And, of course, wrapping up on the euro, the 6E, the currency future, the euro currency future, sideways, just like crude. Range bound on the euro this evening, so our plan is going to be to fade all the breakouts using failure patterns, selling highs, buying lows on the euro. As you can see, we've got plans for crude, gold, E-mini S&P, and of course, we'll wrap it up with the euro. Before we jump into today's charts, though, I do want to remind you guys and gals to make sure you're watching this video on our trading blog here at Sideways Markets. If you're watching the video on our YouTube channel, that's wonderful. There's a link in the description of the video on YouTube that'll take you over here to our trading blog. A couple reasons why. First of all, upper left-hand corner, if you're not a member here at School of Trade and you'd like a free pass to come out and test drive our live trade room, grab your free pass in the upper left-hand corner. In the lower left-hand corner, right above my ugly mug, you'll see a spot to register for our nightly newsletter mailing list. All I need is three things: name, email address, yes, a real email, and then make sure you check your inbox. I'm going to send you a verification email. That way I can keep sending you emails every evening when this newsletter is ready. And then, of course, below the video tonight, you'll see a spot to download all the charts in tonight's video. How nice is that? You can have all the charts ready on your computer for tomorrow's trading session. And, of course, over on the right-hand side, you can learn more about trial membership. Learn more about our 3 levels of membership: beginner, intermediate, and advanced here at schooloftrade.com. You can read member reviews. And, of course, we've always got someone standing by 24/7, 365. There's never a question too big or too small to ask for help if you guys need it on our trading blog. So keep in touch. All right, enough of the chit-chat. Let's jump into some charts here. We got a big week in front of us here, big month ahead of us. The month of November is a fantastic month to be a trader. In all reality, September, October, November, December, January, February, and into the 3rd week of March, that's when we kind of get a break from the action here. This is go time here if you're a professional trader, and we definitely have been having a fantastic last quarter of this 2015. I can't believe it's already November. I can't believe we're already talking about Veterans Day next week, Thanksgiving holiday. Oh, baby. Let's jump right in. Crude oil is sideways and balanced this evening. So our plan is to buy the lows and sell the highs of the range using failure patterns. Guys, the most important word or the most important term I want you to be remembering for tomorrow is failures. Buy the lows with seller failure. Sell the highs with buyer failure. We can see flat moving averages, balanced volume, and the real inability for the buyers or sellers to really take control with anything significant. So we anticipate range rotation tomorrow, and we're going to use every opportunity for traps as price moves from low to high, high to low, and we're going to use that 2-try rule to qualify the breakouts. As you can see, boy, there's really 3 main things on this chart. First of all, you can see the definite trading range, double bottoms, double tops. Second thing here, flattening moving average. Now, I got to be honest, the flattening moving average on a longer term time frame like this really isn't going to be your dead giveaway, just because you're going to see sometimes where the moving average kind of goes down, then up, then down, then up, and it's still a range. It's just not a flat moving average. So the next thing here would be the volume profile. You can see we're definitely balanced right in the middle. And then, boy, you can't really miss this price wedge, right? You know, draw the trend line off the high, trend lines of the lows. Now, guys, price wedges are great, but really all you want to wait for now is failures. As the price goes down, seller failures to buy the lows back up. As the price goes up, right, possibly up to a measured move overhead. As the price goes up, buyer failure to sell it right back down. In a range-bound market, you're expecting range rotation, high to low, low to high, high to low, low to high. And when that doesn't happen, we pay close attention, such as range undershoots. Members, I'm looking at you right now, guys and gals. Again, sell the highs with buyer failure, buy the lows with seller failure, fade those range expansions. What's that mean? What's a range expansion? A range expansion would be these levels above and below the current range, right? So you take that immediate trading range, copy and paste it down, copy and paste it up. And those are, and this is one of the things that's a little bit uncomfortable about fading breakouts. You know, sometimes you see these markets that just take off to the downside like a bat out of hell, and all of a sudden you see it fail, and whoop, right back up it goes. So we're going to use those, in this case, 45.10, 45.6, 46.73, 47 even, 47.35. Those make for excellent range expansion levels to fade. Now, there's one caveat though to those fading those breakouts, and that is the last bullet on this list, and that is the 2-try rule. Basically, if the sellers try twice and keep going, we're going to watch that moving average very closely to see if they fail and bring it back in. So the only time we really have to pay attention and kind of ease off the gas pedal a little bit here for buying lows and selling highs is when we see the buyers try twice and can keep it above the moving average, sellers try twice, keep below that moving average. We do this every day in our trade room here at School of Trade. So if you're a member of mine, this should be just par for the course of what we're used to seeing here for a range-bound market. Guys, on crude, I'll be trading that market, one of my favorite markets, that crude oil market. I'll be trading that live in real time tomorrow morning in our trade room. Come out and see me. We'll do it together. Next up here on the S&P, the S&P 500. Just a little bullish. We talked about this last week. There wasn't really any doubt in our minds last week that we were bullish. The only doubt was, can we get it to pull back far enough to give us something kind of, really tasty to sink our teeth into? We finally got that deep pullback, and this thing just went bonkers today. Classic rotational environment. We drop off those lows and then see ya, suckers, and literally just pinned right to the highs. Now, if you go back in time and look a little bit here, you'll notice what actually happened here. If you're a seasoned S&P trader, you know what I'm talking about here. They trapped the low. That's exactly what you'd expect out of the S&P. Like I said last week, they're not going to make it that easy on it. It was my exact words last Thursday night in our newsletter, was they're not going to make it that easy on it to buy the pullbacks. You're going to wait for them to trap out the sellers and then get this price going higher. What is interesting to see, though, is that they did break above that high, but it doesn't look like they were really able to hold it, right? It doesn't look like, on a day like we saw today, I would have thought it would have closed above yesterday's highs. That definitely tells me, is this a big profit taking? Is this a possible kind of, okey doke and run it right back down? I'll tell you, if they're going to run it all the way back down, that's going to be one massive multi-day range, because this is the whole day's range right here. So we're going to definitely be an inside candle tomorrow on a daily chart, which, we may see this thing dig pretty darn low until it keeps going higher. What it feels like right now is it feels like the buyers are cautiously bullish, and they're just waiting to see that trap low and trap out those sellers to keep it buying. So what I'm going to say right now on the S&P is I'm definitely still bullish. There's no way you can look at this chart and think we're bearish right now. But again, I look at it through the lens of an experienced S&P trader, and I think they're not going to make it that easy. So wait for the deep correction. Stay patient for the deep correction. That'll keep you out of trouble on the S&P right now as we continue to push higher, right? I mean, we literally went up to 2,100 to the tick. I mean, it pretty much is to the tick at 2,100. So I don't think you're going to get it very easy on these initial pullbacks. I'll be very, very careful buying these initial pullbacks until you see at least some sellers able to sink their teeth into it. And then what is likely to happen is you're going to see a series of sells here. You'll see the first one that no one will trust. The second one's going to look beautiful. And if that fails, that's the one you want to buy, right? That's the one you want to buy. Think about it. As this thing comes back down, no one's going to trust that first sell, right? So obviously that one's going to be a little bit dangerous. The second one going lower, that's usually going to look like just a perfect selling opportunity. And because it looks perfect in a bullish market, yeah, you know me, I'm going to look at that to fail and I'm going to buy that, right? As I always say, think about where the neon sign is and wait for that side to fail, and that will often put you on the right side of the market. I know it sounds crazy, but remember, a market like the S&P, if you're trading the S&P more than a few weeks in your career, you've earned the respect, right? You've earned our respect. So when I look at this S&P right now, I think nothing but bullish. Clear spike in channel this evening, which tells us the buyers show definite control today. I mean, they were tooting their own horn there for a bit today. I mean, look at the strength out of these finishing touches here. That looks like a blow-off candle. It looks like stops getting run at the prior highs, right, from last week. It just looks like it. And so with a bullish market, a little bit of a blow-off up at the top here, measured to the tick at 2,100, you got to be staying patient right now for a deep correction. Okay, the buyers are going to have to take profit. Buyers are going to have to take profit and reload at a lower price tomorrow. So our plan is to stay patient for a deep correction off today's highs and use seller failures to buy more. Literally, my exact words tomorrow morning will be, you wait for that juiciest selling opportunity, the one that looks too good to pass up. Wait for that to fail, and that's the one you want to buy tomorrow. Right? The one where every seller and his sister-in-law is going, oh, this is the one I want to sell. Yeah, that's the one everyone wants to sell. Perfect. If that fails, that's the one I want to be on to buy. Right? It's going to rope them right in and then take it higher. This is the S&P we're talking about, right? This is not an easy market for a new trader. You've got to think opposite direction. Where's the neon sign? And then, of course, buy into that failure. The typical spike in channel correction will go back to the base of this channel, right? So here's your spike in channel. Your typical spike in channel correction here is going to pull back as far as that spike in channel, right, the beginning of the channel. So that's literally as far down as it can go. And again, if I had to guess right now, I would guess the first retracement here, that will run out a couple buyers. Those buyers will then start to think we're bearish. The second sell is going to look really tasty, and that's the one, if it fails, that's the one you're going to want. That's the one you're going to want to take. Right? Now, sellers, you guys can get short on the way down with this, but just remember, you're playing against the trend. So every trade counter trend is unreliable. Treat it as a scalp. Get rid of that risk. You better tighten down that stop if you're going to sell this market right now. Because again, very difficult for me to call this nothing but a bullish market right now. So obviously here, guys, looking at the final notes here in this trending market, measured moves up. We're right to that measured move continuation off that spike up, right to that 2,100 big round number. Okay, that's one big clue for a correction. Measured corrections, this is what you definitely want to look for tomorrow. That measured correction, right? And it's going to make it look like that sell's coming, and that's the one you want to. That's the one you want to buy into that stop loss, counter trend traps, And then again, we'll watch that moving average for the proof. So really the word of the day tomorrow is patience. Patience, wait for a deep correction. And then I want you to think, if you're a bull on this S&P with me tomorrow, I want you to think, where is the juiciest sell tomorrow morning? Wait patiently for that one to fail, and that's the one you want to buy into, right? Think like a veteran. Think like a veteran. Veterans make their easiest money by taking the money right out of the account of the rookies, trying to buy highs, trying to buy those first pullbacks after a spike in channel day on the S&P. How about some gold? Boy, gold has been trending lower since my gal Yellen's FOMC announcement last week, and our plan remains the same. Nothing's changed. I'm actually quite surprised. This has been the most consistency we've seen out of the yellow metal here in quite some time. We're looking for selling opportunities on the gold every time we see short-term corrections off the lows. And we're going to do it with buyer failures. The reality is this market has been trending lower for almost a week now. Well, yeah, three consecutive days here. So I'm not going to say we can't keep going lower, because that will be lying to you, right? This market will keep going lower. It will keep doing it as often as it wants. I'm just saying right now, the path of least resistance, the safest way to sell a bearish market is to wait for price. They'll take some profit. Buyers will try to buy that pullback, and when they fail, you keep selling it. That's the safest bet on a kind of pinned to the mat, very bearish gold market we've seen over the past 3 sessions. This market is clearly bearish, but the strong bear trend makes it hard to get a good entry up off those lows, right? So we stay patient for sellers to take their profit, price will push higher, and then we look for buyers to fail on the pullback, right? Every time it gets above that moving average, we're looking for buyers to fail on the pullback, right? We saw one right into the close this morning on gold. And again, we're going to continue to see that tomorrow, most likely too, right? We'll see price go up, buyers try to buy that pullback, right? Again, think about where would the counter trend buyers love that pullback, and think about where they're going to get stopped out if they're wrong. Okay, hey, they might be right. We might see a full-blown reversal, but the reality is calling reversals are very, very difficult. They're very unreliable. While you're trying to find the perfect reversal, everyone else is just waiting for those to fail and making a killing as it keeps trying to go up and gets pulled right back down, right? Try to go up, pulled right back down. Measured correction up, pullback fails, right back down, right? Measured moves, measured corrections, channel rotation, counter trend traps. On a market like this right now that clearly nobody is going to be surprised by moves lower, you want to wait for the buyers to try to take a swing at it and let them fail. That'll be the easiest money you're going to make on the yellow metal. And then finishing up here with another flat, balanced, range-bound market, the euro, the 6E, not to be confused with the euro pair, right? The spot pair. So Euro is sideways and range-bound this evening. Our plan will be to fade all the breakouts using failure patterns, selling the highs, buying those lows in tomorrow's session. We can see a flat moving average, balanced volume, and the inability for the buyers or sellers to clearly take control. So we anticipate range rotation tomorrow, and we're going to look for every opportunity to fade those breakouts. Here is a great example of a range-bound market. And you talk about looking for that neon sign, right? You talk about where would the juiciest trades be that are going against the market structure. Those are the ones you want to wait to fail, right? So as the price goes lower, where's the juiciest trade going to be? Sell the retracement, right? Sell it lower. And it might work, but the odds are not in their favor it's going to work. And when it fails, we'll be buying right into that failure, right? As they get stopped out, the sellers add to the buy orders, and the price rockets towards those highs. As we go up towards these highs, and we do expect to see range rotation, just like crude. Exactly the same plan right now in the euro as we have for crude as well. So you can pretty much take crude's plan, copy and paste it to the euro right now. As we go higher, where will the juiciest trade be, right? You'll have the moving average coming back. People will try to buy that pullback. When they fail, we're going to sell it right back down. So we know in a range-bound market, the rule is range rotation, high down to low, low to high to low, back up to the high, right? And then again, sell the high, right? Sell the high with buyer failure, buy the low with seller failure. And guys, remember, I'm talking about where, think about where that neon sign would be. Think about where that easy trade's going to be, where if you didn't know it was a range, right? If you thought this was a trending market, where would you be buying the pullback, right? Where would you be selling the retracement? That's where you want to look for that failure. We do this all day, every day in our trade room. Range-bound markets are very, very common, especially after a series of trending sessions. Don't forget, we're going to fade every breakout until that two-try rule, very, very important. And then we'll watch that moving average to make sure we know if the two-try rule or if the buyers or sellers really mean business. Guys, as you can see here, range-bound on the euro, also range-bound on crude. Again, pretty much a very similar scenario here. On the gold, we have a market that is not surprising anybody right now being bearish, so stay patient, wait for buyers to try and fail, right, to get those counter-trend buyers trapped on the wrong side of the market. And then again on the S&P, Spike and Channel tells you the name of the game tomorrow is patience into a deep correction. Right when they get those sellers engaged on the S&P, that's when you want to look for them to fail. So stay patient on that E-mini S&P tomorrow. And again, definitely a bullish market right now. If you want to sell it, don't forget, be careful trying to sell that S&P right now. Make sure you wear your helmet, your mouth guard, and a seatbelt if you're going to be a bear on the S&P right now, or any of the E-minis for that matter. Guys, don't forget, grab your free pass on our blog, register for our newsletter mailing list, download today's charts, and of course, before I let you guys go, I do want to remind you all here, grab a look at our homepage at schooloftrade.com. You can register for our free trial. I take a lot of pride in the fact that you're going to learn more with me on my free trial than anywhere else on the interwebs. I can guarantee you that. We've been doing this longer than anybody else on the planet, guys. Beginner, intermediate, and advanced levels of membership. We have a spot for everybody here at School of Trade, and we always have someone standing by 24/7, 365 to give you guys a hand. Guys, there's no question too big or too small. I'd love to help you kickstart your career the right way. And remember, we got a full week ahead of us, full month ahead of us. I hope you guys are ready for the action this week here with us, guys. Thanks for being here. My name is Joseph. Don't forget, send me some feedback. JJ at School of Trade. I would love to know how I can make this newsletter a better place for you to learn and earn every evening. Please share this information with a friend and come out and see me tomorrow. I open up my trade room at 8 o'clock in the morning Eastern Time here at schooloftrade.com, and we also do our nightly newsletter Monday through Thursday at 8 p.m. Eastern. My name is Joseph. Now get out of here, rest up. Don't forget that 36-hour sleep cycle means tomorrow could be a bit of a groggy day for you. So keep yourself hydrated, right? Careful out there, follow the plan, and you guys be well out there. Thanks for being here. My name is Joseph. Adios, amigos. Bye-bye for now.